Spain's central bank, the Bank of Spain, BDE, said it intends to launch an experimental program to begin testing wholesale central bank digital currencies, CBDCs, and is seeking collaboration proposals from local finance and technology institutions. The bank will focus on three main areas with the program that seeks to simulate the movement of funds, experiment with the liquidation of financial assets, and analyze the benefits and drawbacks of introducing a wholesale CBDC to its current processes and infrastructure, according to a translated December 5 statement. A wholesale CBDC refers to a digital currency typically for use by banks to keep reserves with the central bank, as compared to a retail or general-purpose CBDC that's open to use by the public. The program is exclusive to the BDE, and it stated it was unrelated to work being undertaken in the European Union researching the use of a digital euro. Interested parties wishing to participate in the program must meet the minimum requirements set by the bank and disclose the economic means they're willing to commit to the project in an application process which closes on January 31, 2023. In its reasoning for undertaking the program, the BDE said the study of CBDCs can help determine to what extent they can contribute to adapting to the needs and demands of an increasingly digital society. It also noted CBDCs are being analyzed and experimented on within a number of jurisdictions, mainly focusing on a retail application. However, it stated more companies are delving into those of a wholesale nature or interbank. Related, some central banks have dropped out of the digital currency race. Brad Jones, the Assistant Governor of the Reserve Bank of Australia, RBA, said on December 8 that a central bank conference that a retail CBDC could result in people avoiding commercial banks entirely and potentially displace the Australian dollar. The RBA's Australian dollar CBDC trial released on August 9 has seen over 80 financial entities proposing use cases, according to Jones, but noted banks could face liquidity issues if a CBDC becomes the preferred source of holdings. The Bank of Thailand, BOT, is also expecting to launch a pilot of a retail CBDC before the end of 2022, with the testing environment limited to 10,000 people. This comes after the Bank of China launched the first trial of its CCNY in April 2020, now the most widely adopted CBDC in the world, having marked $14 billion worth of transactions during its pilot phase. Australian CBDC receives unexpected interest but could hurt banks, RBA. A central bank digital currency, CBDC, pilot program in Australia has received more than 140 use case proposals from the finance industry, but the Reserve Bank of Australia, RBA, warns that it could displace the Australian dollar and result in people avoiding commercial banks entirely. The RBA released a speech on December 8 to be given by Assistant Governor Brad Jones at a central bank conference held from December 8 to December 9 local time, in which Jones speaks at length about what effect a CBDC could have on the Australian economy. Jones notes that the RBA has been surprised by the industry interest they have received since releasing a white paper on August 9, with over 80 financial entities proposing use cases covering many areas such as e-commerce, offline, and government payments. The team working on the Pilot.io program is working out which of the proposed use cases to take into its pilot phase early next year, and is expecting to publish a report on the project around the middle of 2023. Jones also discusses the potential risks that are associated with an Australian CBDC, and points to liquidity issues and other issues the banks could face if a CBDC becomes the preferred source of holdings. For example, with deposits of Australian residents such as savings accounts now making up over 60% of total funding for their banks, enough Australians choosing a CBDC over the Australian dollar could result in banks not having sufficient capital to lend to consumers, which in turn would make it harder for the RBA to transmit monetary policy, he said. Funding composition of banks in Australia. Source, RBA. Jones also notes that Australians preferring to hold their funds in a risk-free CBDC could lead to bank runs, with Australians withdrawing deposits en masse. Related, report outlines reasons why stakeholders are against CBDC. However, the Assistant Governor suggests CBDCs could also provide Australians with many benefits, such as privacy benefits, arguing that the central bank has no incentive to use personal data which can be exploited by private organizations, and could help safeguard monetary sovereignty that may be lost if a stablecoin or foreign CBDC fills a domestic vacuum. He also points to the potential for offline transactions to increase the resilience of existing payment systems, in addition to increased efficiency and cost reductions for end users. Jones finished the speech by adding that Australians should be confident the Reserve Bank will continue to issue banknotes for as long as they place value on them as a public good. Critics are often concerned that the introduction of CBDCs will end with banknotes being phased out, however, a fear which is given credence by Nigeria's move to further limit cash withdrawals on December 6 following the issuance of the e-Naira.